Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 25th of July. Another week impacted by inflation in the background, rising interest rates and so on, although markets for the most part have been able to hang on to previous gains. What has become front and centre in terms of markets this week is the second quarter half-year reporting season, especially in the States, where the news so far is that generally speaking, around 70% of companies have actually beaten expectations. So far, so good. In terms of next week, that kind of focus comes into the UK with any number of big blue chip names reporting, especially the banks. We're going to get half year numbers from Lloyds, NatWest, Barclays and Standard Chartered. Now, for the banks at a high level, there are any number of factors for investors to look out for. First of all, whether there's been any deterioration in credit quality, in other words, whether there are going to be any potential provisions added by the banks, as there was in the first quarter. Secondly, look out for the fact that because of their strengthening capital ratios, a lot of these banks are actually awash with capital at the moment. So it will be interesting to see whether there's any other updates on dividend payments or shareholder returns in general. On top of that, we've got a rising interest rate scenario, of course, so that should be good for net interest margins for the banks. That's another key metric which investors will be looking out for. And of course, outlook comments on the economy generally will be something that will give us some more colour as to what's actually happening on the ground. Stocks specifically, obviously, each of the banks has their own particular things that we should be looking out for. For Lloyds, for example, it's the growth in their mortgage book, despite those rising interest rates, which is expected to confirm its dominance in that position. It's also got a sector-leading cost-income ratio, and that will be treated with some disappointment if that were to change. For NatWest, of course, another bank awash with capital, it's a question of what their plans are. They've recently spent a few more £1 billion reducing the government stake, but this one in particular does have the wherewithal to raise interest dividend payments if they wish. Current dividend yield of 4.7%, Lloyds 4.6%. For Barclays, and if the US banking season is anything to go by, investment banking could be under the spotlight. It's obviously been a very choppy trading environment, and needless to say, for Standard Chartered, the current difficulties that we're seeing in the Asian regions and China in particular may well be weighing on their numbers. Apart from the banks, we've also got a half-year update due from Shell. Clearly, the strength of the oil price has actually meant that Shell has revised its projections for the oil price. So there should be a fairly decent set of numbers coming through here, notwithstanding that they took a near $4 billion provision for their exit from Russia. They may or may not provide any updates on whether there's any more of that to come. And of course, quite apart from that, in the background, they've also got a high gas presence and gas prices have been strong. There are also other companies reporting which include but are not limited to the likes of Centrica and also Unilever. Thank you for watching. Have a great week.